Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about Nio's less than impressive earnings report. So without any further ado, let's jump right into today's article. We'll be analyzing a Barron's article which starts off by saying that Nio, which is an electric vehicle company located over in China, recently released their fourth quarter results, which were less than expected, bringing in overall future guidance and current revenue and earnings per share that were less than expected. And due to this, I anticipate that the share price, of course, will fall temporarily until their next earnings report, where we could get very positive news. Because remember, like we said in the last video, from now on throughout the year of 2023 to 2024, this is when Nio is going to start ramping up their overall production. So let's go over the results. Nio reported a fourth quarter loss regarding their EPS, which is their earnings per share, of a loss of 51 cents a share, and they also brought in revenues of $2.33 billion. Now, why is this negative? Well, essentially, they missed on Wall Street's expectations for both their earnings per share as well as their overall revenue. Wall Street was looking for them to bring in a loss of 26 cents per share for their earnings per share in EPS, and for their revenues, they were supposed to bring in $2.5 billion worth of sales. So clearly, they only brought in $2.33 billion, which is less than $2.5 billion, and for their EPS, they only brought in a loss of 51 cents instead of a loss of 26 cents. So this is a huge negative blow for Nio stockholders. However, in the future, we are anticipated to see this company come back from the depths of despair and hopefully return some shareholder value to investors. However, I wanted to briefly highlight their overall delivery numbers, because from 2022 of quarter one, they delivered around 25,000 vehicles, same for quarter two of 2022. However, from 2022 of quarter two onwards, we see that this company is rapidly scaling, jumping from 25,000 deliveries up to 31,000 deliveries, and then from quarter 3 of 2022 to quarter 4 of 2022, they jumped from 31,000 up to 40,000 deliveries. Clearly, in the first month of 2023, their overall deliveries did falter, but since we're past that obstacle, we can anticipate that the company will continuously scale their overall deliveries for their electric vehicles, as well as release new models. So literally, from this point going forward, we can anticipate their next two earnings reports will be more positive than this one. We finally got over the hump, because remember, these earnings are actually a few months behind. This is not what Nio is bringing in currently. This is what Nio brought in for the fourth quarter of 2022. Well, now we're in 2023, so I anticipate their next earnings report, and actually their next two earnings reports, to be quite positive. Nio is still a pioneer and one of the electric vehicle leaders in the entire world, but specifically over in China, because they are further infiltrating the overall premium smart electric vehicle market. The deliveries that they brought in for the fourth quarter of 2022, which was 40,052 deliveries, is still a very impressive metric, especially if we remember that 20,824 of these premium electric vehicles were SUVs, and 19,228 of these electric vehicles were sedans. As Nio continuously releases new models, we can project and estimate that their future earnings and revenues will increase, because it's going to diversify and open up new revenue streams for them. I'd also want to point out that this would represent an increase of 60% from the fourth quarter of 2021. So it's obvious that Nio is increasing on their overall delivery numbers. And if we compare these metrics with the third quarter of 2022, it would represent a 26.7% increase. However, right now, investors are somewhat melancholy about their miss on revenues as well as their EPS, which means that the overall share price will go down temporarily until the next earnings report. But even given the fact that they brought in, for the fourth quarter, $2.3 billion worth of revenue, that would still equate to over a 60% increase compared to their fourth quarter of 2021. So on a year-over-year basis, this is a very positive development for this overall company. And even if we compare this to the quarter prior, it would still represent a 23.5% increase. So I think investors aren't actually looking into the year-over-year growth of this overall company, because look, as we look at this quarter compared to previous quarters and this earnings report compared to others, we can see that their vehicle sales actually increased year over year by over 60%. This means that this is a rapidly scaling and growing growth company. On top of that, I also want to mention that their balance sheet is very strong. Right now, on their balance sheet, as of December 31st of 2022, their cash and cash equivalents numbered around $6.6 billion. That is a load of money on their balance sheet, so it looks like this company is well positioned to continuously scale throughout the future. Also, throughout the whole year of 2022, I think they did quite well, bringing in $7.14 billion. And by 2026, we can anticipate this number will skyrocket well over $25 billion. So they are literally going to over 3x their overall total revenues, and these aren't projections just from me. Their actual management in Wall Street believes this company could do it. So although this was a less than impressive earnings report due to various macroeconomic factors, such as the Chinese New Year, economic shutdowns, and overall supply chain issues, we can easily project that the future of this company is very bright. Now, I do want to make investors aware of two other problems with this company, besides geopolitical risks and other macroeconomic risks such as inflation. Internally, the company's net loss was $2 billion for the full year of 2022, which represents an increase of around 260% from the previous year. So it's not good that we're seeing their net loss actually increase as time goes on. We want to see that decrease. But I think this is only going to be temporary, considering that as they scale, their net losses should actually decrease as time goes on. Lastly, I would want to make you aware that their basic and diluted net loss per ADS was around $1.29 for the full year of 2022, which is less than impressive. So I think this could give investors a good buying opportunity once they wait for this company to fall in their overall share price. This is another reason why we should practice proper risk management regarding this company, because you don't want to overexpose yourself to a company like Nio, especially since this is not supposed to pay off until 2026 or afterwards. Now, we did get some great news from the company's CEO as well as their CFO, and their CEO is their Chief Executive Officer and their CFO is their Chief Financial Officer. So let's listen to what they had to say on their earnings report, and I quote, "Nio delivered 40,052 vehicles in the fourth quarter of 2022, representing a solid growth of 60% year over year and achieving a record-breaking quarterly delivery. Nio capped off 2022 with 122,486 vehicles delivered, representing a growth of 34% year over year. Nio has established itself as the most competitive premium brand in the smart electric vehicle market in China, ranking first in the premium battery electric vehicle market segments priced over RMB 400,000 and RMB 300,000, with the market share of 75.8% and 54.8% respectively in the fourth quarter of 2022. According to the retail sales data from China Automotive Technology and Research Center, and that was from their CEO. So essentially, he's saying that investors aren't looking at the good news here. Nio brought in a record number of deliveries for the fourth quarter of 2022 at over a 60% year-over-year growth rate, and for the full year, they delivered 122,000 vehicles, which equates to a growth rate of 34%. Again, it shows that this company is rapidly scaling, and I don't think investors are actually paying much attention to that. They're just paying attention to the overall revenues and earnings per share, which again are very important, but I personally am looking to the future. The company's representative goes on to say, "In 2022, we made positive strides in the research and development of core technologies and competitive products, infrastructure development, and global market expansion, laying a solid foundation for the company's long-term growth." The CEO goes on to say, "In 2023, we plan to deliver 5 new products based on Nio's technology platform 2.0, deploy 1,000 additional power swap stations to further improve holistic user experience, and continuously strengthen our competitive advantages in key areas of smart electric vehicles," end quote. So I would say that the CEO has huge plans for 2023, and I really do think they are going to shine in the next earnings report and the next few earnings reports going forward between the years of 2023 and 2024. The chief financial officer also had to say this: 2022 was a year of decisive investments and accelerated global market entry for Nio. In 2023, we will focus on improving our execution efficiency and work in an agile and efficient mode to embrace the competition in the global electric vehicle market in the long run, end quote. So, I think these comments from the CEO and CFO should put investors' worries at ease, at least for the most part. Also, if you want more information on this earnings report, feel free to go into the description of this video to read this whole thing for yourself, because I'm not going to dive into every single segment. But if you are a financial nerd, just like I am, then you really want to know the rest of this overall data. I'm just giving you a general overview and summary, so you don't have to rewatch the earnings report and you don't have to read this very long article. Lastly, I want to mention that Nio tweeted that they are actually excited about these developments, considering that Nio brought in total revenue for that quarter of $2.3 billion, and they are very excited that they got to issue over 40,000 vehicles. For the full year, their revenue reached $7.14 billion, like we said earlier, and again, I think the best thing regarding this company was their delivery numbers of 122,486 units. So, if the company is happy, then I am happy. Even though investors are going to see the share price temporarily drop, we can look forward to their next earnings report. But remember, don't overexpose yourself to risky single growth companies. I have around a 1% allocation to this overall company, and I essentially never expose myself more than a 5% allocation to any singular risky growth company, specifically a company that is located in a foreign market such as Nio. I would love to hear your thoughts down below about where you think the future of the Nio share price is headed, and if you are bullish or bearish on their next earnings report or even this earnings report. Remember to go and annihilate that like button, subscribe if you are new, comment your thoughts down below, and I will see you in the next YT video.